Good morning. You're watching Heads Up on NDTV Profit. We've come to the week's close, well, almost, but from the looks of it, at least from the global signals this morning, all indications are there that it is going to be a packed day because the global signals so far indicate that Indian markets are likely to have a rather terrible day of trade. And when the stock markets are crashing, that's when we get busy, get to you all the details, what's happening in the markets. The top stories first in the headlines. Commodities plunged the most since 2009. Led by oil and silver, it's the biggest commodity correction in more than 2 years. Sell-off in commodities spills over to equity markets. Wall Street stock indices fall for the fourth straight session.
We have to face legally. We cannot run away from things.
And as the 2G spectrum probe deepens, another high-profile name ready is to head to jail. Kanimori, the daughter of DMK Supremo Karunanidhi. First, we'll talk about what's happening in the markets, and then we'll tell you why it's happening. Asian markets first, as always, starting with the Japan benchmark index, the Japanese Nikkei 225, that's trading down almost 2%. 1.87% cut right in the morning is definitely not good news. Kospi, it's trading down 1.6% right now. The rest of the Asian markets, all of them have a negative bias to itself. The KLSE is right now down 0.75%, Taiwan off just a little bit. But in terms of Wall Street indices, Wall Street stocks have fallen for a fourth straight day on Thursday as a massive sell-off in commodities have spilled over into the other markets, forcing investors out of the high-risk assets and rattling equity markets before Friday's U.S. payrolls data. That's the crucial one now that everyone's watching out for. The Dow Jones Industrial Average has dropped 139 points, or more than 1%, to close at 12,584. The S&P 500 stock index, that has dropped just 2%, 0.91% to be exact, and that has closed at 1,335. The tech-heavy Nasdaq Composite Index has lost a little under 0.5%. Declining stocks have outnumbered advancing ones on both the NYSE as well as the Nasdaq by a ratio of 8:5. But disappointing economic data has actually added to investor worries. You have the number of claims for U.S. unemployment benefits unexpectedly rising last week, pushed by auto plant shutdowns. So you have applications for jobless benefits jumping by 43,000 to 474,000 in the week ending April 30. That's a figure at its 8-week high, and now it's at the highest since August last year. A spring day break in New York, and emergency sort of benefits program in Oregon, and also auto shutdowns caused by the disaster in Japan on March 11th. Those were the main reasons for the surge that we have seen in applications for jobless claims. But to the commodity space, which is the reason everything is happening in the markets this morning across Asia. In a slide that is reminiscent of the steep sell-off in the wake of 2008's financial crisis, Brent crude oil dived a record $12 a barrel, natural gas dropped $7, and silver, whose earlier losses were the catalyst for this slide in the commodity space, has slumped nearly $5 to its biggest one-day dive since 1980. Now, talking about oil, oil suffered the biggest one-day price drop ever for the Brent futures contract, which settled down 8% at $110 per barrel. NYMEX crude futures right now are trading around $100 a barrel. Silver plunged more than 10% on Thursday. It's the biggest one-day drop in dollar terms for silver since 1980. Silver has now lost 30% this week since it surged to a record high near the $50 an ounce mark that was last Thursday. Silver's plunge for a fifth day has led the decline in commodities. We have silver futures, which are now trading down almost 4%, trading around a 6-week low of $34 an ounce. And widespread investor liquidation has also prompted gold to slide more than $3. So you have that one. Gold futures now trading around $1,461 an ounce. That's the lowest seen since mid-April. So you have silver's decline, sending the gold-silver ratio, which actually measures how much silver an ounce of gold can buy. That is now at an 8-week high of above 40. So, of course, that's the commodity market picture like. But one of the fallout of this commodity rout and this panic selling in oil and copper and silver has led to the dollar's best day since October against major currencies as investors fled to familiar safe haven. Gold soared nearly 2% against the euro. Euro has actually had its worst day against the US dollar since August last year. So the dollar's rebound initially got underway when you have the ECB President Trichet signaling that Eurozone interest rates are unlikely to be raised next month. But then, of course, the fundamentals perhaps remain largely in place for US dollar weakness. Where does all this leave this entire growth versus inflation debate and the market technicals? How should we read all of these signals? We're asking these questions to Mr. James E. Glassman. He's senior economist with JP Morgan Chase. He's joining us on the phone line from Georgia. Good morning, Mr. Glassman. Hi, here from India. This is Bianca.
Good morning. How are you?
Hi, very good. Thank you very much for joining in. I'm going to first talk about the fact that in Asia, the fight to contain inflation that seems to have been rather widespread now. So you have surging food and oil costs, which are escalating the danger of inflation in Asia, and that's prompting policymakers to accelerate monetary tightening. But the casualty, at least in the short term, is going to be growth, right? How best can this inflation versus growth challenge be tackled at this point, according to central bankers' thinkings?
Yeah, you know, they have to be cautious, and they will be cautious, I think, because if they overdo it, they could do serious damage to the growth prospects. I think events like today, when commodity prices appear very speculative and they start to correct, it may make some of the central banks reconsider. And I think in light of these kinds of events, they'll be fairly cautious. I mean, most central banks, although they across Asia, although they have raised interest rates, they're being very cautious, and I think they're trying to balance the inflation stresses, keeping growth in line while not derailing the growth. I think at the end of the day, I think the commodity pressures are a lot of it speculative or the result of crop damage last year, which is driving up a lot of food prices. And I think when we see the response of the farm sector this year, we'll see a fair amount of relief on the commodity front, which is why the Federal Reserve says they believe these pressures are transitory. And so if they are transitory, I think we'll find out that most central bankers can be somewhat relaxed. And we're already seeing a little bit of that from the European side today, if you saw that.
Yeah. But then is silver a bubble? It's dropped 30% so far this week.
Yeah, it really, honestly, what's going on in the commodity market makes no sense. It's not consistent with the fundamentals, but it is causing problems for the central banks because if speculative excesses drive up these prices, it pushes up food and energy prices. It's interesting to me that around the world, the only inflation problem anybody has is food and energy. Everybody has the same problem, and it's largely because of these supply disruptions or because of the unrest in the Middle East that drove up oil prices. So to me, that calls for caution from the central banks. I think because the developed economies have been doing far better than the developed economies, it does make sense that the central banks in the developing economies should be moving a little bit, and they are moving ahead of the U.S. is doing nothing. Europeans seem to be a little more cautious about it now. So I don't think there's much chance that the tightening by the central banks is going to cause a problem for the growth side.
But would you say there are plenty of reasons to perhaps doubt the fact that this commodities rout will continue?
Yeah, I think at the end of the day, the fundamentals have the final say. And yes, the global economy is recovering, but in the developed world, there's severe underemployment. And it doesn't make sense that commodity prices would be doubling or tripling in the span of 2 or 3 months. That feels like a speculative kind of event, and I think we may be seeing the correction of that right now as it begins. We've been seeing this in the silver market, but these kinds of moves in the commodity markets are not, to me, not consistent with the fundamentals. And at the end of the day, speculation is not likely to drive prices away from what is consistent with the fundamentals.
So I'm going to just touch upon technicals very briefly, Mr. Glassman. If we see the S&P 500, it fell through its 14-day average, but still it closed above 1,333. Do you think that's a level that could perhaps become an important market support, limiting future losses?
It may be, and frankly, the fundamental picture is very good for equities, and companies are generating record profits. So it's very hard to see. I don't know much about the technicals, but it seems to me the equity markets here and everywhere really are justified by the kind of performance we're seeing from the business community and the kind of earnings that they've been generating. So that technical signal that you're picking up may actually be a meaningful signal.
Okay, and just before I close this conversation, Mr. Glassman, have to ask you about your sense of how the Friday's jobs data is likely to be. What's your sense? Is it going to be another bad one there?
You know, we're looking for something fairly moderate. I mean, after all, the economy is growing only 3%. And if it's only growing 3%, I wouldn't expect employment to be much faster than 150 to 200,000. So we are seeing some signs of moderation in the job. There have been some big disruptions because of weather, because of the Japanese auto disruptions, and the run-up in oil prices is starting to slow something. So we're expecting something fairly moderate. And nothing that would signal it's time for the central bank to be getting ready to move interest rates.
Mr. Glassman, thanks very much for joining. It's always a pleasure to have your perspective here on the show. Helps us place a lot better all these global signals and the goings-on in the global markets and the commodity markets. Thanks indeed very much. We're going to take a short break right now. The global signals don't really indicate a positive opening for the Indian markets. Nonetheless, what are the cues that we have, the stocks we're watching out for, also the levels we'll be watching out for in terms of the Nifty and Sensex. All of that coming up just after this short break. Welcome back once again to Heads Up on NDTV Profit. Ashu Sharma joins us now to walk us through the cues for the Lal Street. Good morning, Ashu. What's happening in the commodities space and also across Asian markets this morning? It's enough indication that we are going to have a rather busy day, isn't it?
Good morning, Bianca. Well, there are two ways to actually look at it. One, of course, is the cues coming in from Wall Street and from Asia. And as you rightly mentioned, equities and commodities both are in a slump phase. We've seen commodities ranging from crude oil all the way to silver seeing a biggest drop. Now, one interesting thing it does, it removes a lot of overhang from the inflationary point of view. So, expect a gap down opening. As far as support levels are concerned, two important ones. 52.32 and 51.77. These are the support levels from which the Nifty had bounced back in the early part of this year and went up to about 57, 5800 and 5900 as well. But then again, these are the next key prominent supports. If these two are taken out, then we could slip all the way to 5,000 or even to 5800. That aside, commodities would be the focus point of the day. But watch out for financial stocks. There's been a huge amount of selling for the last 4-5 days. But as I mentioned earlier, if inflation fears start tapering off, financials, autos, rate sensitives like real estate and even consumption linked stories could start to see a bit of a pullback.
I don't know about our viewers, Ashu, but I latched onto two words: gap down opening and 4,800. Doesn't seem like a good Friday. Thanks very much, Ashu. But not just the entire macro space and the commodity space. We will also be focusing on stock-specific action in today's trade. A couple of stocks that should be in focus today include Jyoti Laboratories, PVR, Everready. Pankaj Poddar joins us to run us through why these stocks are likely to be in focus today. Good morning, Pankaj.
Well, good morning, Bianca. Let's first start with Jyoti Labs and Henkel India. Jyoti Labs, which already owns about 14% stake in the company, has come out and said that they are planning to buy, or rather they are buying majority stake in the company from the parent.
Thanks, Pankaj. You talked about results and you flagged that off for us. So we'll take it forward and talk about the companies which will report their results today. Companies like NIIT Tech and Rolta, Cadila Healthcare, these are companies which will be releasing their results, their quarterly results today. Shefali joins us with a complete lowdown on the market expectations from these companies. Shefali, Cadila Healthcare, Rolta, how are these companies stacked up as far as the expectations go?
Morning, Bianca. For Cadila Healthcare, sales are expected to come in at about 1,000 crore rupees. That's a likely growth of about 18% on a Y-on-Y basis, and profit is expected to come on a sequential basis. Bianca?
So, of course, we'll watch out for how these companies fare in trade later on today and the performance of these companies. Cadila Healthcare, in IT Tech Rolta. Right now, we're going to take a very short break here on Heads Up. On the other side, we bring to you an exclusive story. It looks like the Environment Minister is proposing that all firms set aside some money for corporate environmental responsibility in addition to social responsibility. That coming up just after the short break.